Hello and welcome to this YouTube channel, the Grade 11 Accounting Extra Lessons Academy. By me, the relentless Monama Humphrey the man. And remember, in this channel, I'm about empowering you with accounting knowledge and skills you need to succeed in your accounting journey. Whether you're a Grade 11 accounting learner or an entrepreneur interested in learning accounting but you did not have a clear understanding with regards to the Grade 11 related work, then this channel is for you. And make sure you stick with me on this video until the end, because in this video I am going to share with you 5 important stuff. Number 1, I'm going to share with you the partners equity account and their functions. Number 2, I'm going to share with you changes in the partners equity. Number 3, I'm going to share with you the 3 final accounts that form part of the income statement of the partner. Number 4, I am going to share with you closing procedure relating to this 3 final accounts. Number 5, I am going to share with you other ledger accounts that you should know as an accounting learner, especially dealing with a partnership business. Those are the ledgers that you need to know. Yes, of course, I'm going to share with you these 5 important information, because whether you're learning for your exam or you're just eager to expand your accounting knowledge, then this channel is for you. As you know that this channel will always provide you with accounting knowledge, skills, and guidance you need to succeed in your accounting game. And if you are new here in this channel, you are an accounting learner but you're new in this channel, please make sure you subscribe to this channel in order for you to keep being updated on new accounting tips. And also do not forget to hit that notification bell in order for YouTube to keep notifying you whenever this channel uploads a new video. Now go ahead, hit the subscribe button right now if you're an accounting learner, and also hit that notification bell. And without any waste of time, let's get straight to the point and allow me, the King Hannah boy, to jump on my stage and kill the mic. Number 1, partners equity accounts in the partnership business and their function. Now, one of the most important features with regards to accounting for partnership is that the equity account for each partner are recorded or are kept separate. That is, each partners within the partnership business, each equity account, they are kept separate in a way that each partner will have their own separate capital account and the current account, right? Now, if you're 3 or 2, the first partner will have his own capital account and a current account. The second partner, capital account and so on and so forth, and they say. So each and every one will have their own capital account and their current account. So that means their equity are kept separately. Now, what are their functions? What are the functions of this capital account and the current account? Now, the capital account is a ledger account that is used to record the permanent contribution made by the partner. That is its function. And the function of the current account is to record the current transactions that affect the partner's equity account. Transactions such as salaries to partners, withdrawal made by partners, bonuses given to a partner, interest on capital to a partner, right? And the profit sharing. If there was a final account that was distributed to that partner, it also gets recorded into the current account. Now, the capital account plus the current account equals to that partner's equity, right? So the equity account, we've got 2 equity accounts in a partnership. That is capital account and the current account. Unlike the sole trader, with the sole trader, we've got 2 equity accounts which are capital and drawing. But with regards to partnership like this, you must know that the partner's equity account, it's capital account and the current account. Make sense? Number 2, changes in partner's equity account. Now, there are circumstances where the partner's equity will change in time. It will fluctuate. Now, it will increase or decrease, right? Now, it will increase if further capital contribution were made by the partner or the profit were realized by the partnership business. Then it will increase. So it will decrease if withdrawals were made by the partner or the loss were incurred by the partnership business. Now, remember that it is normal for the partnership agreements that each partner may make a further capital contribution. Now, when the partnership business decided that each partner will have a further capital contribution. Now, each partner, for example, the first partner contributed 5,000. That partner can also make a further capital contribution of extra 10,000. Now, this further capital contribution, usually they bear interest payable to that partners. Now, this gives a partner a fair return on capital invested for the money invested more than other people, because that person has contributed more than other people. So there has to be interest added to that. And also this one, it encourages partners to make investment within the business other than outside. That interest is the one that encourages them, right? So that is how the further capital contribution is made and the interest added on that, right? So the further capital contribution will make that to increase. If at first the person contributed 5,000 and contribute a further 10,000, then it will increase by extra 10,000, right? Now it will also decrease. Now it will decrease if withdrawals were made by the partner. Now you need to also keep in mind that it is normal for a partnership business to allow partners to make withdrawal from the partnership business. Now, these withdrawals are stipulated in the partnership agreement, right? Now, as well, you need to be careful, because if you give partners that benefit that, okay, you can withdraw, but there has to be limit. And this is limited by putting more interest on withdrawal. You withdraw from 5,000, 60% charge. So this will prevent partners having to abuse these benefits of withdrawal. Make sense? Now, this is how the changes in partners' equity take place. It will increase or decrease. And now you know what will make it to increase and what will make it to decrease. So further capital contribution make it increase. Withdrawal made it decrease. Profit generated by the partnership business make the equity to increase, and the loss made by the partnership business make the partner's equity to decrease. Make sense? Number 3. Now, number 3, we're talking about the 3 final accounts that form part of the income statement of the partnership. And what are those 3 final accounts I'm talking about that form part of the income statement of partnership? Number 1, trading account. And number 2, profit and loss account. Number 3, the appropriation account. Now, what are their functions? Now, the trading account is an account that is used to record the gross profit generated by the partnership business. And the function of a profit or loss account is to calculate the profit or loss generated by the partnership business. And the appropriation account is used to calculate and appropriate the final profit between partners. So those are the functions of those 3 final accounts that form part. These 3, they form part of the income statement of a partnership business, right? Number 4, the closing transfer relating or between these 3 final accounts. Now, remember that the closing transfer is whereby we close these accounts, these 3 final accounts. They have to be closed and transferred. Now, this closing transfer are done in 3 steps, and I'm going to share them with you. Step number 1, the trading account will be closed off to the profit and loss account. And this is done by debiting the trading account and crediting the profit and loss account with the gross amount, with the amount. Number 2, the profit or loss account will be closed off to the appropriation account. And this is done by debiting the profit or loss account and crediting the appropriation account, right? Now, the appropriation account, it will be used to calculate and appropriate the final profit distributable between partners. Now, this final profit, it will be calculated after making deductions such as bonuses, interest on capital, and salaries. If those things took place and withdrawals, it has to be withdrawn from, or it has to be actually subtracted, not withdrawn, but subtracted from that profit or loss before the distributions were made, right? And at the end of the financial year, the distributions will be made through a profit sharing ratios, and they will be added to each partner's capital and current account, right? Now, those are the three steps regarding the closing transfer. Make sense? Number 5, if I'm not mistaken, it's number 5. I think that information is number 5, whereby I'm sharing with you other accounts that you need to learn and know with regards to the partnership business, right? Now, what are those? Number 1, let's talk about salaries account. Now, salary account is an account that is used to record the salaries paid to a saving partner. Remember that in a partnership business, there will be partners who are actively involved in the running of a partnership business. So nothing is for free. These people, at the end of the day, they will have to be remunerated, paid salary. Now, that it will be paid into the salaries account, not into their capital account, but the salaries account. Are you with me? Number 2 account is bonus account. If as well at the end of the financial year, we remunerate a partner for his or her own expertise, that bonus will have to be included into the bonus account. You with me? Number 3, we've got loan account. Now, the circumstances will happen where the partner grant capital to the partnership business. Now, this partner will be regarded to as a creditor to the business, right? Now, and this information will be included into the balance sheet as such. So now, depending on the payment term, this creditor will either be a current liability or a non-current liabilities, depending on the payment term. Now, and the interest payable to that loan by the partnership business will be considered as a finance cost, and it will be disclosed as such in the income statement. In the similar way, a partnership business may also grant money or loan to the partner. Now, as well, depending on the payment term to be made by the partner. Now, that partner will be categorized as either the current assets or the non-current assets. If the loan has to be repaid within 1 year, then that partner will be a current asset. If they will have to pay that loan over 1 year, it will be non-current assets. And the interest receivable from that partner's loan, it will be included under other income in the income statement. On other income, it has to be included there. It will be disclosed as such. That is the loan account. Followed by what account? Talking about the loan account. I've spoken about loan account. What other account that you need to know? We've spoken about loan account, salaries account, bonus account, interest on capital account. Remember, I'm a human. I'm trying to think. I'm not a robot. So don't be surprised when I get confused, right? I'm trying to remember the information that I have to share with you. Now, interest on capital account. Now, the interest on capital account is an account that is used to record the interest by the partner or from the partner, right? So those are the accounts that you need to be aware of when you're dealing with a partnership as a chapter. You need to remember this account that they might arise when they talk about the salary or a bonus or interest or a loan. You need to understand the account that you'll be using. Make sense? Now, those are the 5 important information that I wanted to share with you in this video. And if you like the content of this video, please indicate to me by giving this video a like button. As you can see, the channel is still having 2 videos because it's still new. There are more videos that's coming better than this, informative than this. Now, go ahead, give it a like button if you like the content of this video. And if you want someone, if you are looking for someone who can teach you accounting from the comfort of your own home, just so you know that I provide accounting extra lessons online, whereby I teach you from the comfort of your own home. You don't have to worry about the transport cost. As long as you've got access to internet, smartphone, and the laptop that you're currently holding right now, you and me are ready to go. And also, look up above there, you will see the video popping. If you see the video popping up there, make sure you click on them and continue learning. But if you don't see any video popping up, that means it hasn't been uploaded for you. But you might one day see it popping up. Until next time, may the relentless Monama Humphrey the man, humble and the intelligent King Hannibal, the RMH himself, and the accounting subject assassin. I will be with you in the next video, and make sure you see me in that upcoming next video above. Till next time, have a wonderful accounting day. I'm out of here.